Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, November the 5th. My name is Eric Wilkinson, and yes, you may recognize me from mainstream media as the Wolfman, but what I'm here to do is not only teach you how to build option strategies and trade around these markets, but to how to implement those option strategies into your portfolio. That means following specific rules and or guidance that we use in order to find the highest probability strategy for that assumption. Anyway, please remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, on with the economic data. We did get trade balance negative 52 billion, which was right in line with expectations. Then we got final services PMI out of the United States, which isn't our main one to look at, but that one came in above 50. The one we look at is the ISM non-manufacturing PMI. That's the Institute for Supply Management. PMI is Purchasing Managers Index. Now, this is the companies that look forward in time to decide how they are going to ramp up or not ramp up their business. Now, the United States, we did get our manufacturing PMI, Purchasing Managers Index, that came in below 50. That means that is contraction in the economy. And we did get 3 of those in a row. That should signal a recession. The United States is, though, more of a service-oriented economy. And therefore, we're going to probably look at this one a little bit more critically than we would the manufacturing sector. Manufacturing is really overseas. China and Europe is more of a manufacturing sector. Here in the United States, though, non-manufacturing comes in at 54.7, expected to be 53.5, so above 50. Expansion in the economy. No revisions to the previous data point there. And then jobs, or JOLTS jobs opening, which isn't the main number to look at, but it's still a good one. Job openings coming in at 7 million job openings across the United States. It was expected to be right there at 7 million. They did revise last month's number up from 7 million to 7.3 million. So a nice revision to that economic data point, moving higher, meaning that more companies are looking to employ people. This is kind of the time of year where companies are starting to do their new hires, especially for the C-level aspect going into the new year, because they start budgeting for that looking forward. That service sector kind of manufacturing PMI kind of really mirroring that whole mantra, if you will. All right, let's move it back over to the charts now that we've got our economic data out of the way. It kind of gives us the idea of what we think is going to be happening with the equities as well. But we've got crude oil moving a little bit higher, probably on some of that good economic data there. That being said, I don't think that we can really sustain much momentum to the upside further than where we really are. We could go up and start testing the $58 a barrel and then $59 a barrel. Why do I say that? Because we've got a couple of Fibonacci's there that always have a tendency to be tested. One thing to note, though, we have been failing at the 200-day. We got this little orange line is the 200-day simple moving average, all right? 50 is right there below that, that little red line there. So we've come up. We're actually right against that right now, kind of bouncing back and forth above and below it. The settlement above that would be a little bit more bullish. Settlement below that, obviously, a little bit more bearish. Now, we also have the point of control. This is what I've been talking about, where I find value. Somewhere in between these two areas where I think that the market is going to really trade the most of the time here and fill in some of this low volume area here. So I've been talking about trading between $55 and $50 a barrel is really the sweet spot for this type of economy. Like I said, manufacturing is one of the key demand aspects of crude oil, because when we break that crude oil down into the distillate, some of it goes into gasoline, airplane fuel, stuff like that. But then we also get some of that stuff that goes into building of plastics as well. So that being the manufacturing side here and across the pond, that's kind of waning on some of this demand in crude oil. Crude oil is a futures product and expectations of future demand for that product, but I think that that's a little bit overdone, which is why I've come up with this idea of we're going to stay between 60 just gets way too overextended, especially for the type of economies we're in. But then we also have the $58 and $59 right there that is going to act as resistance on the way up as well. So a pretty heavy lift to get through that 200-day SMA, the $58 a barrel and the $59 a barrel. And then, of course, the value area high right there at 60. So anything above 60 just really means that it is overextended to the upside. Gold futures we've got coming off quite a bit today. Some of that good economic data is saying that, the idea of gold being up in this area is a little bit overdone. Well, I think that we're going to stay up near these 1500s, despite the fact that we got this big slam down. There is no real support and resistance here that we have lined up with a Fibonacci or anything else. But I think that the sweet spot is going to be right here in and around that 1500 a troy ounce mark. That is because of what I see going forward with the Fed. The Fed looks like they might be cutting interest rates, even though they said that they weren't going to at the last meeting. Don't get me wrong. I think that there is a push to have them lower interest rates. We're starting to see a little bit of slowing here in the United States. We saw in the manufacturing sector. Now, it's not really showing up necessarily in the Institute for Supply Management for the non-manufacturing sector. But that being said, easy money policy, some of this QE that they've been doing should weaken the dollar and drive that gold future a little bit higher. What we're seeing right now is some of this gold money coming out and putting it into riskier assets like the equities. We saw Adobe come out with better than expected earnings and a great forward guidance. So tech sector starting to move, and that usually is some of that idea of we're taking our money out of the safe havens and putting it into some more risky assets so that we can get better yield for our portfolios, which yield is just a better return, right? And then we move over to the bonds. Bonds are coming off, not really following through with my idea of lower interest rates, because remember, as we have something with interest rates, I'm talking about lower interest rates, right? Well, if we have lower interest rates, that means that the price should be going up, right? That's the teeter-totter effect. So that was what we're talking about there. What we're actually seeing is price is going down here right now. We're seeing price go down, which means interest rates are going up right now, which is that teeter-totter looking like that. And that is what this is telling us, okay? That is pushing down on the price, which is driving interest rates a little bit higher. And a lot of this is going to have to do with some of the levers and pulleys in the market. Again, pulling money out of that safe haven, which is a treasury, and putting that to work in equities. All right. And we do have a bottom here that we can see that we've already created there. Bottom came down and tested the 57 area, which is only a point away. We're down 1.25 points right now. Another full point isn't that hard to believe. You have one more point to go, and we're already down 1.5 points on the day, which means it could happen tomorrow. But having said that, I think that that's where we might find our bottom and start seeing a bit of a recovery. So tomorrow we could see this come down and then start seeing a little bit of a move higher, even if equities continue to rally here. All right. All right, VIX is moving higher, back into the teens right now if you look. But right here we have the Dow Jones Industrial Average up 30 points on the day, almost 30 points on the day. That is a new intraday high again. Now, no, some of this theory that I've been talking about, we're not going to see continued all-time highs every single day. At some point, we're going to see people starting to cover. We are above the value area high here that I've talked about. This is the value area high this should be an A, value area high, which just happens to line up with my Fibonacci there. Both of those are really where people are going to start slowing down. You can already see we're starting to see a little bit lower volumes going in here. That means people aren't really accepting price at these levels for these. We move over to the NASDAQ. Again, new all-time high here at 82.48. Now, again, we're above this Fibonacci extension, starting to see a little bit of lower volumes happening. That means price is not being necessarily accepted at these levels. And therefore, I believe that we are going to see the markets roll over a little bit. I don't think that we're going to see like a 10% correction or anything. I just think that we're going to see a little bit more volatility as this market is creating all-time highs and kind of do one of these type of things, right? Now, those tops are not like lined up with anything in particular. I'm just trying to give you a visualization as to what I think is going to happen here. But I do think that we are going to see the market slowly creep higher, maybe create some highs in and around that. But I think we're going to see more of higher highs and then higher lows and continue on that trajectory somewhat like that. Unless we get something really bad coming out. I mean, a lot of this trade stuff is pretty bullish. Now we've got a mixed bag here, obviously, with the E-mini S&Ps just slightly down on the day, but we could call that unchanged for the most part. And then we'll move over to the intraday of the E-mini S&Ps. This is a breakdown, 30-minute segments. You can see something to note here that our highs were created overnight. Now, what I'm saying with that is that high is going to be discounted by the mainstream traders. Okay, we're going to be looking at the day session. You can see overnight inventory was very long. Flushing those guys out today is a bearish signal. All right, that is, longer term bearishness, at least for today, because it's not being accepted. We discounted what was going on. Now, if we see those overnights get very long and the day session blasts off higher, then that means their acceptance of that bullish sentiment. We're not really seeing that going on right now today. So that is some of those kinks that I've been talking about. You saw the bonds come off, and I think that the bonds are going to kind of peel back again. Usually the retailer is one of the ones holding the bag because they're late to the game, right? So I think that we could see some bearishness coming forward throughout the rest of this week, maybe even. A lot of it's going to be dependent on some of the earnings. We don't have any great earnings coming up. I do have DVN Energy, which is later on today, and then CVS tomorrow morning, which is a couple of earnings plays that I might do. And then later on the week, we get a little bit better, especially on Thursday. There's some good earnings to trade, so we'll be talking about those down the road. All right. Other than that, I'm preparing for this Tiger Shark trading. We've got 6 speakers in 4 hours. We're going to be jam-packing in a bunch of content there for you guys to learn on how to trade. Everybody's doing something a little bit different, so you should check it out no matter what your angle is on trading. Maybe you like charting and stuff like that. There's a couple of guys doing that. I'm going to be obviously talking about options because that's what I love. So check that out. Go to Tiger Shark Trading and sign up for that webinar. Like I said, 4 hours. You don't have to watch the whole thing. You can come in and watch the guys that you want to check out. So go check that out there. Also go to protraderstrategies.com. We're going to be wrapping up this whole bullish bearish sentiment in this course that we've been doing. We come up with a bullish and bearish bias, and then we find the right strategy to implement around that that bullish or bearish bias. All right, so check that out. Also follow us on Facebook so you can get instant access to these, or almost instant access. It takes me a little while to upload this stuff and press all the files and stuff, but go check that out. You'll be the first one to get that. We're putting a lot of content out there and on our YouTube channel, but on Facebook we are at protraderstrategies.com. All right, that's all I got for you today. If you can't take that, take it easy.